Hi, it's Steve and Joe from Freshagenda. And Steve, this week we're having a bit of a closer look, a deeper dive into some of the US support arrangements that have been rolled out over the last couple of weeks.
Yeah, some news on Friday of some detail of the second item there, which product purchases, which were announced earlier in, I think in April. Mm-hmm. But they were indicated to be $100 million a month for 10 months or so. Which had there was a small response from the market, but the announcement that came out last week gave a first tranche of those, which was 3 times that amount. And there's been some reckoning as about how much product there is involved in that. Put that alongside the Section 32 purchases, which is an old program to aid farmers. And it looks like per month there's about 25,000 tonnes of cheese being purchased and at least 340 million litres of milk. So that's brought some response from the market. So I guess there's a tightening of availability of product, which is what we've read into that situation, which as you can see what happened to spot prices. Futures also responded and that's firmed the market quite a bit and made things a lot more positive in the US.
Sure.
So let's just look at what that actually means. So if we think about the impact that this is going to have over the 3-month period, so the purchases of product, if they keep going at this rate, and it's been brought forward from what was previously announced, then
I wonder why.
What do you think? What do you reckon?
It's an election year?
Oh yeah,
there is. Yeah,
there is that. So
I'm sure that's just a coincidence.
Making farmers feel better, yeah, that could be the case.
Yeah.
Okay. So we've tried to reconcile what does this mean for the balance of US milk over the April to July period. Given these programs have kicked in, we've got a lot of other things going on and a lot of other things in the data. So we try to add this up. So firstly, the loss in cheese demand. So that's our reckoning of the net loss. That's food service, destruction.
Net of retail, yeah.
Yeah, net of retail. Retail surged. And it's hard to get the retail data yet because there is apparent some price increasing.
Sure.
Prices increasing in there, so that's a factor. But let's say that's our take on how much milk's involved with that loss of cheese demand. Secondly, there's been a gain in fluid milk sales. So there's a small number over the period. But when you think about the gain over the prior year, right? There's been a bit of a turnaround. So we've suggested there's been quite a solid year-on-year growth in April and May, which will peter out
after years of decline. Really,
yeah, that's right. There's a milk loss, so there's supply management measures. There's been some serious attempts to reduce milk collections. So we're assuming, let's say, it's a 2% cut in milk collections over that 3-month period. Then the purchases, the milk value of what's been purchased, just focusing on the fluid milk and the cheese over those 3 months. And lo and behold, it gives us a nearly balanced situation. So a lot of activity from the government to help address this, as well as the industry in stemming that flow of milk. And you can say it's almost got things balanced over that 4-month period.
Yeah.
What's also going on, though, not shown here, and it doesn't have a raw milk effect, is what's happening to surplus cream, because fresh cream has been hammered as well. That ends up as a problem in the butter category as it's churned, so that's not shown here, but that has an impact on that market. But at least that's why the market's feeling a lot more positive.
Yeah, so it's not just perception, it's probably a reasonable response, really, to that rebalancing.
Yeah. Then I think we look at what does this mean for cheese. This great convergence that's going on here. Added a few dotted lines on this chart here that the US coming back, we're seeing the Oceania price falling towards some midpoint where those roads meet.
Having held up for quite some time on very low availability at this time of the year. Just as you project forward into spring, where will we be? And you would imagine that there would be some meeting place there, wouldn't you?
It's like a race against time.
I know, right?
Yeah.
It's exciting.
Very exciting for Australian milk prices because cheese is the big variable. The other commodities have fallen in value, but cheese is holding up. So the difference between quite a few cents in, Australian milk prices hangs on this chart.
Absolutely, yeah.
So we then go to Europe, which, that middle line in that chart showing the European cheese price, this maybe is what's going to drive that going for the next few months. So here's some recent weather showing things are warm and quite dry.
Yes.
And that's being felt reasonably strongly in some regions because that drying out is slowing down milk supply. The outlook, and in case of who you believe here.
Yeah.
So
choose your forecast.
Yeah. 3 big forecasters have put together outlooks on this world weather site that we use, showing the European, the American, and the Canadian views of this, and they all look fairly bad.
There's a lot of brown in all of them, really, isn't there?
So that's the next 2 weeks in terms of rainfall, which might help slow things down further than what they already are. So that might put some tension in feed prices. When we look a bit further forward, this is the outlook in June. July doesn't look much better. So we might, where this is leading to, a bit of tightening of supply, a bit like a supply management program.
A natural one.
Because it doesn't look like there'll be an industry one or a government one.
No, the Commission has been obviously opening private storage and a few purchases into private storage already, but not a whole lot of activity apart from that from the Commission at the moment. So probably looking at this and hoping it'll take care of itself.
The sky would, and the Commission's barometer is the milk price outlook.
Yeah.
So if you use futures prices as to where they project now, and they're fairly close to wholesale markets, and you look at the correlations that we've observed in the past between the big payers of milk and commodity values, it shows that we're in for a healthy dip, but then rising as we get through summer. So they're not going anywhere near the level they got to when they last intervened with supply management.
Where you've got to go to, or where you've got to get those tractors in the main street of Brussels. Yeah. We're not really in that territory yet, are we?
So we've heard the Commission's view is that's 22 cents. So we're well north of that, and looks like it will be so. So this is an interesting dimension to watch as we go forward. Brings us to the chart of the week, Jo.
Well, we might as well stay in Europe. And this is just some of the more recent data from a couple of the big players, France and Germany. And again, just showing that bit of a downturn in production trends there just on those dry conditions. So we're starting to see that in the data already.
Yeah. Okay. That's a little wrap. All this very tense, very important stuff as the markets digest and try to work out of the COVID impacts. But these are some interesting things to continue to watch. That's all from us. Thanks for watching. We'll be back next week.